Is that the only story at this point? The idea that we could be headed into a global recession, and as a result, you're not going to see oil prices come back?
I mean, recession fears are definitely weighing on, the market right now. Also, strong dollar because, oil is priced in dollars. So there's a concern that that will impact demand as well. But, there is this other story of this sort of still a pretty strong fundamental backdrop as well. And everyone's going to be watching what happens in China, the potential easing of lockdown restrictions there. That would be a significant story for oil markets because really the China story has been really, really weighing on markets. Everyone thought there'd be lifting of these lockdown restrictions over the summer, and the Chinese just continued to lock down millions of citizens. So any lifting there would be positive for oil.
Chengdu opened up again this morning, though, after a couple of weeks of closure there. Major manufacturing hub, 21 million people that now are open, and you might expect that would put a little bit of higher numbers when it comes to WTI. That's not the case. We're down by about 1.75%.
No, absolutely. I think the story today is the recession concerns. But again, in terms of the physical story, if we see, going forward, any sign of a major turn in the Chinese policy, I think that would be constructive. Also, we have the U.S. SPR release winding down. So that's another story to be paying attention to.
We've heard the administration here, the Biden administration, say that if oil falls below $80, that they might actually consider refilling the SPR. It's kind of weird to tell people what your numbers are. Does that in some way set a bit of a floor so that, people know, hey, if it falls below $80, maybe it's time to buy in?
I think, it's a delicate balance the administration is doing because on the one hand, they've been saying, look, we're putting oil on the market. We're concerned about U.S. consumers. At the same time, though, they've been trying to tell U.S. producers ramp up production. So I think that's more of a signal, actually, to U.S. producers. It's safe to continue, your plans to put rigs back to work because we may put in some type of floor. It's that balancing game the administration is doing.
A lot of people we talk to who follow the energy markets closely and have for a long time think that short term or medium term, I guess, you could be back to $120 a barrel. Where do you think, Helima, we could wind up?
Becky, the key thing to watch is what happens in December. That is when the EU embargo on Russian oil takes effect. You have shipping and services sanctions, meaning it'll be difficult to transport Russian barrels to third countries. Those all take effect. So it's going to be key to see whether this G7 price cap plan successfully launches, because the Treasury Department is very concerned about a multi-million barrel Russian disruption. They want this price cap plan to work because that would essentially allow barrels that are not going into Europe to flow into India and China, albeit at a discount, so Russia, in theory, would take less revenue. But that's the key offset. But if that price cap plan is not successful and the sanctions fully launch, then you're looking at a significant disruption. So I think it's going to be very, very important to see what happens in December.